We'll be diving into the latest news from the world of stocks and finance, so let's get started. We've got a packed show for you today, with updates on some of the biggest players in the market. First up, let's take a look at Corning Incorporated, but it seems we don't have any information about this company in our notes, so we will move to other companies. In the tech sector, Alphabet saw its share price jump by 4% as investors positioned themselves ahead of the company's next quarterly dividend payment. The dividend payout of 0.21 per share will be made to all shareholders of Class A, B, and C shares on record as of March 9, 2026. This comes on the back of a strong earnings performance last year, with net income expanding by 32% to $132 billion, driven by revenue growth of 15% to $402.8 billion. Meanwhile, other companies like B2Gold Corp and Alphabet Inc. are making headlines as well. B2Gold Corp swung to a net income attributable to shareholders of $419 million from a loss in 2024. Thanks to higher gold prices and increased production. The company expects to produce between 820,000 and 970,000 ounces of gold this year. On the other hand, we have companies like Corning Incorporated that are not mentioned here, but also others such as Google's parent company Alphabet Inc., which had a tremendous quarter with annual revenues breaking past the $400 billion level for the first time. The launch of Gemini 3 was a major milestone, and the company has great momentum, according to CEO Sundar Pichai. In other news, we're seeing movement in the shares of companies like Corning Incorporated. Just kidding, there is no information about this one, but we have others such as Alphabet Inc. We also saw UBS Group AG being mentioned somewhere else but not here today. Lastly, let's talk about some of our regulars, GUG, BTG, and more specifically, B2Gold Corp, which announced the distribution of 0.02 in cash dividends to all common shareholders on record as of March 6, 2026, payable on March 19. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we continue to navigate the ever-changing landscape of the stock market, it's essential to stay informed about the latest trends and developments. Today, we're focusing on two companies that have been making waves in recent days: Applied Optoelectronics, AAOI, and Celsius Holdings, CELH. Applied Optoelectronics, a leading provider of optical networking equipment, has seen its stock soar to a 9-year high ahead of its earnings release next week. The company is expected to report revenues in the range of $125 million to $140 million, representing a significant growth from the same period in 2024. While this may seem like a promising outlook, it's essential to approach with caution, as the company also expects to incur a non-GAAP net loss. On the other hand, Celsius Holdings, a beverage company that owns popular energy drink brands such as Celsius and Rockstar Energy, has rallied for a second day, jumping 9.49% ahead of its earnings release. Analysts are expecting revenues to reach $2.4 billion, representing a staggering 78% increase from 2024. This growth is largely attributed to the company's strategic acquisitions and core business expansion. While both AAOI and CELH have shown significant potential, our conviction lies in the belief that some AI stocks hold greater promise for delivering higher returns with limited downside risk. As we've discussed before, the AI sector is rapidly evolving, and companies that are at the forefront of this innovation are likely to reap substantial rewards. As we move forward, it's crucial to keep a close eye on these developments and adjust our investment strategies accordingly. Remember, in the world of finance, it's not just about being informed, but also about being wise and cautious. Welcome back to the Riskwiser Zone. Today, we've been exploring the complex world of artificial intelligence and its potential impact on our lives. As we dive into the final segment of our show, I want to shift our focus to a critical aspect of AI development, governance, and compliance. As AI systems become increasingly integrated into our daily lives, it's essential to ensure that they are designed and deployed responsibly. This means implementing robust governance structures that can monitor and regulate AI decision-making in real time. The concept of an audit loop has emerged as a potential solution, where AI systems are continuously monitored and evaluated to prevent errors, biases, and other potential risks. The benefits of this approach are twofold. Firstly, it enables organizations to identify and address potential issues before they become major problems, reducing the risk of costly mistakes or even legal action. Secondly, it provides stakeholders with greater transparency and trust in AI systems, which is critical for widespread adoption. However, implementing an audit loop is no easy task. It requires significant investment in technology, talent, and processes, as well as a fundamental shift in organizational culture. Moreover, the rapidly evolving nature of AI means that governance structures must be agile and adaptable to keep pace with changing technologies and regulatory requirements. Despite these challenges, forward-thinking companies are already embracing the concept of continuous AI compliance. By integrating governance into every stage of the AI lifecycle, they can move quickly and responsibly, unlocking the full potential of AI while minimizing its risks. As we conclude today's episode, it's clear that AI governance is not just a necessary evil, but a critical enabler of innovation and growth. By prioritizing transparency, accountability, and responsibility, organizations can build trust with stakeholders, drive business success, and create a better future for all. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.